If you're a homeowner, odds are you could be an investor. It could be now or it may be later. Hey guys, I'm Tim with the Tim Stout Group, and I am a luxury real estate certified broker. I am a certified negotiating expert. I have over 3,000 transactions under my belt, and I work with a lot of investors. And one thing I see a lot of investors doing now, and I'm doing this long form because it's going to take a little bit longer to explain it, and I couldn't do it in under 60 seconds. So basically, what homeowners are doing, especially if they bought before the boom, before the COVID boom, they've been able to develop a lot of equity, and they're able to use that equity to start their investing career. If you just bought your house in the last couple of years and you don't have that equity yet, you will have that equity. So this lesson will be good for you too. This is zero. What you owe is here. So what you owe here, through the years, your debt gets paid down because you pay your mortgage. Through the years, the appreciation will push your value this way. So this becomes a bigger delta. This becomes your investable wealth. You need to treat your home as almost like it's a savings account, because you're putting money into it every month and it continues to grow because of every year it'll grow a certain percentage, just like a savings account will. But imagine a savings account with hundreds of thousands of dollars and ones where you get a really good interest rate. So that's where I want you to think. And what I'm having a lot of my 8 clients doing that are investing, they're coming in and they have, anywhere between 100 to, some of them has $300,000 to $400,000 in equity. They're taking that equity out in a form called a Heloc, which is a home equity line of credit, and they're buying a property cash or they're using it as a down payment. Whichever one, it doesn't matter. It's a higher interest rate, so you need to understand that you're going to have a payment while you're getting the house ready. So some people are buying the house for 100% cash, they're renovating the house, and then they're able to sell it for a profit, pay off their Heloc, and start from zero. A lot of investors, and this is the strategy that I recommend the most, they're buying a property, 100% cash if possible, they're renovating it, then they're putting a tenant in place. Once the tenant is there, it's the house is seasoned for about 6 months because they've already bought the house a little bit undervalued. They renovate it, so they improve the value. So within 6 months, they're going to do a cash out refinance. So a cash out refinance, they can pull out 75 to 80% of the new value, not the old value, because you already bought it under that value and you improve the value. So you created a bigger delta. And a lot of my clients are able to pull out every bit of their money they took out, pay off their Heloc, and now they have another house that's producing income, that someone else is paying your debt down, and it's appreciating in value every year. So now that client has 2 piggy banks. And you continue to go on and go forth. You find the properties that are undervalued, you can improve, you can appreciate, and that just continues to grow your portfolio. As your portfolio grows, you get leverage to buy more properties, to build a pool, to do renovations, a savings account, or maybe another form of retirement. Not everybody has a 401k that they're going to be able to live off for 20 to 30 years once they retire. So this gives a lot of people options that would have never had them before. Hey guys, if you're thinking about investing in the South Atlanta area or in the Northeast Tennessee, my teams will be happy to help. Remember, who you work with matters, and have a great day.